What's up, studs? Kunal here, Bulls on Wall Street. Guys, happy Wednesday. Holy shambolies, right? The market's on just a monster gorilla run. There's not much else to say except it is a monster gorilla run right now. And, one of the better ones I've seen in quite some time. In my day, we've seen a lot of runs, but this has just been fantastic because the way the dips get bought every single day and they just ramp back and these algos turn on has been something that's just, very interesting to watch. Once again, we are overbought short term. We are extended, but we are not parabolic. And so we're in a little bit of a sweet spot. When we look at markets, we want to look at a handful of things. Number one, what are the long-term trends, right? Long-term trends higher. What's the intermediate term trend? We use the 50-day moving average for that. Higher. What are the short-term trends, right? Short-term trend is higher too, right? When there's green shading, that's the area between the 920 AMA is green. Your short-term trend is higher and it's strong, right? This is what we call the Goldilocks zone. So we have all these things. Long, short-term, intermediate terms are higher. On a 5-day basis, 6-day basis, we're extended and overbought, right? So we have a little bit of a cross current there. Does that mean the market's going to, crash back or anything like that? No, but it is something to keep watch of. You get a 1% swoosh down in a market anytime. And if you're trading anything with leverage, options, margin, futures, even a 1 or 2% dip, if you are caught off guard, you will get smoked if you are utilizing too much leverage without stop losses and things like that. So when market gets like this, you de-lever a little bit, right? And tighten things up because you just never know, all right? We have CPI tomorrow. Look, if the CPI comes in low, market may gap up. And now you got to gap up on, you've ran 9 out of 10 days. You get a big gap up tomorrow, the day may be over. You may actually play for a gap fade. And then, once the gap fills, then who knows? You may rip back or, so on and so forth because the dip buyers have been relentless. But we'll keep an eye on that tomorrow. The CPI, if you get a 1.5%, 2% gap up, 1% plus gap up, historically for me, is a money loser. You end up buying everything too high, shorting everything too low. It's just, the range is sucked out. It's too strong to short, too extended to buy. I typically have a little bit of fluctuations on those days, so I'll probably leave things alone, or I just reduce my size greatly. So some of the things that we need to kind of keep an eye on. Let's take a look at the watch list. My plan is if we get a big gap up, I'm leaving things alone. I will go for a quick fade at the open, get the gap fade, half the gap, whatever, and then we'll see what happens. Yeah, maybe I just leave, or I doubt I'll leave, right? We're degenerates. But, we'll have to kind of keep that into the back of our heads. I felt a little frothy today, especially end of day. So we'll have to keep an eye on this. SPY's also extended top of the Bollinger Band, 93 stochastics. Good time to de-lever, de-risk, take some profit off. We're starting to get into those weird territories. IWM, tomorrow could be an inflection point for this, right? Got a nice coil pattern here. If you can come out of this zone, those numbers look okay. You got something right there, right? So we'll keep an eye on this bad boy. Whew. Ho, 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 ho. Right? Keep an eye on this bad boy. If we get a move out of this little cross, we might have something. Maybe you get this thing back up over here over the course of the next few days. And then, it does its dump off like it always does, right? It doesn't dump off like it always does. One thing we've learned in the last 2 years, never bet on the IWM. It'd be nice to see it break, but, does it really matter? Nope. Why doesn't it matter? Well, first of all, if you look inside the IWM, are you really trading any of these fucking stocks? Nope. Probably not. Right? Really trading that many of these stocks? The second thing is, there's enough stocks to trade right now, just as it is. Is it a narrow market? Sure. But there's a lot of heat in whatever narrow stocks are going. That's all that matters, right? If there's 30 hot stocks in the market, Saves you a lot of time. Saves you a lot of time. So that's the fun part. And then you know what? Small caps and stuff are going too. So plan for tomorrow. If the IWM does bust loose, we want to play some IWM stocks, right? So I want to play something like this CVNA, setting up for a breakout here. It did fade off a little bit here, but we want to be in these kind of IWME names. Just a few. Doesn't have to be a huge amount. If I got CVNA here, I think that's a mid-cappy name. I would consider it kind of mid-cap, large-cap, but, you know, mid-cappy name, something like American Superconductor Corporation, right? After the breakout, a pullback into support. Maybe a Palantir, right? You know, you got this breakout here. Is this really mid-cap? No, it's a large cap, but right, it's cheaper. So we can kind of call it a mid-cap. You know, maybe this Kava, this $10 billion company, pulling back into the 50-day moving average. Tomorrow could be a little bounce day for this, right? Reddit, similar, right? After test all-time highs, you've pulled back into the bone zone. So now, right as you fill into this, you kind of make your third tap into this. Tomorrow could be the day for that. You know, maybe we've seen some signs from UPST of recent, right, that it's starting to kind of perk up a little bit. I think that could be something. Now, this is a firm, probably not. UPST just looks a little bit better, but, you know, we want some of these kind of mid-cap names. Maybe Roblox here. Look at this. We got a level on Roblox that's developing. It's not that sexy, guys. It really isn't, but, right, this is all we got. This is all we got. We've got a spot there at 40. If it goes, you're getting into the 42, 43 range very quickly. And there's pent-up demand for these kind of names. So those are the ones that we want to kind of rip and ride, slip and slide on. If we're just looking at, you know, your regular old go-tos, all right, MU, 2 tests at the 50-day moving average. You got a W pattern setting up here, right? If you look here, coming into this, you got a little neckline, add a little gumdrops to it, and you got yourself a sweet spot here. You know, this reminds me kind of like Qualcomm, where, right, like you pulled back after the earnings, you start grinding on the 50 MA, right? Then next thing you know, you're up 20 points. We could get something like that going, all right? AMD's a daily trader at this point. It looks like it's going to do kind of like a little bit of a Tesla where, you know, you get a longer term W pattern here too. And it looks like it's doing a little bit of a Tesla where the market's getting so hot, the buyers are coming in, picking everything off the bottom. So, you know, these are things to kind of keep mind of. Meta. After the pop, you got 3 kind of inside days building out this flag. Looks pretty good. If we need a large cap, I think that's the way we go. Now, look, on the short side, if we get this huge gap, I think the easy one to be probably be this Apple, right? This following, it just looks like the QQQ for the most part, but it's liquid. You can trade the puts on it. It moves pretty well now. You know, the ATR's increased a little bit on this. I think you could do something like this. You know, obviously, we've been looking at fucking Tesla, fighting with Tesla every day. You know what? The interesting thing is, you know, the last couple of days, I mean, I've been fighting with this thing, but I've been making money on it. You know, I didn't short it yesterday, but today we had a really nice kind of short into the pop and, you know, kind of covered into this flush. And then there wasn't really anything the rest of the day because once it starts remounting, it just, the algos turn on. I could have probably maybe taken some over here for the end of day, you know, end of day flusher. But it has been, I would have made a lot more money if I was just long in it, right? But, you know, by rule of thumb, I just don't long stocks that are up 8 days in a row. So that's just something to kind of keep mind of. You know, maybe tomorrow's the day you are at a key level of, you know, resistance. It's your 2024 resistance point. So if it's going to rug, it's going to rug around here. Maybe it doesn't rug. It doesn't have to rug, right? It's not, it's one of those things too. It's like it's overbought, but is it like extreme parabolic? No, right? It's just overbought, you know? So something to kind of keep an eye on as we go through this. If we need a short, if we get a big gap up on this tomorrow, I was thinking, you know, anything, you know, we start filling in some of this gap here. We back and fill some of this, then I think we get a nice easy fade on this one too. It is a beaten down stock. It used to be $70, so not an easy short. Or should, and it's easy to borrow, so sometimes they can squeeze a little bit harder. But dude, you got a good spot on this leg. It's got the boots in the coots, so I think you can rip and ride on that one too. Guys, a couple more here. Just Dell's got a range break here. You know, you've been just kind of meandering around this kind of 148, 149 zone. You know, maybe tomorrow's the day for this too. Well, it looks like I got a crazy Rorschach test on this, but you know, if you look here, right, it's just testing this 50-50, just getting ready to kind of go out of this. You know, maybe tomorrow's the day. But I repeat, I think this is a place where you delever a little bit or look for some rotation. You never know. This dreaded, you know, rotation has never come, right? We've been looking for a long time. But, you know, hey, at some point it'll happen. But I think if we need to flip something like an Apple is probably a lot easier to short than a Tesla. You know, you could even get like into the Soxel ETF or something like that, right? You know, this does 50 million shares in volume, and it moves quite a bit too. So great ATR. So, you know, say this thing gaps up to 72, 73. I mean, at that point, you know, you got a little bit of a flipper on it, you know. So guys, raise up your stops. Don't be too greedy. It's been an awesome run. It can keep going, but there is a inherent extra risk when you just stretch the rubber band so far. The snap can hurt if you don't delever a little bit. So just be mindful of that. I love you guys. Hey, let me know if you have any questions. Take care.